Closing Bell is sponsored by TD Ameritrade.
Okay, 3 minutes left in the trading session. I want to go over what happened today when the Fed announcement was made. This is very interesting. Look at that. This is the dollar index. This was the first most sensitive indicator when the Fed announcement came out. In fact, it even went lower before the announcement. They were anticipating that you were going to get some sort of form of quantitative easing from the Fed, which they got. A little stutter step and then sharply lower. We're at 7-month lows against the yen. We are at 4-month lows against the euro regarding the dollar right now. And when the dollar goes lower, what goes higher? Hard assets, gold now, that continues at 6-month high, up $34, almost a 2% gain for the price of gold today, now to $1,767. Oil also higher. The Middle East tensions don't help, but we are marching and creeping ever higher toward $100 here in New York. They're still well above that in London right now with a gain of 1% in New York at $98.12. As for the other markets today, the yield on the 10-year, look at that. What got lost in all of this was a very strong auction for 30-year Treasury bonds today. The demand was very high at that yield, and it brought some of the yields lower today, and we are finishing lower on the 10-year at 1.73%. As for the stock market, as the euro goes higher, so does our market. Pretty good gains here today, 1.4%. Now to 13,520 on the Dow. And the sectors are going to look very familiar again. Materials pinned to the top there as the dollar goes lower. Financials, energy, consumer staples, and technology. Kenny Polcari, you are skeptical of this market rally, aren't you?
Absolutely, because listen, I think all it really says, all Ben Bernanke said today was, it's not pretty. This situation is not pretty, so we're going unlimited. Here you go. Anything you need, let's go. They're worried about the end of the year. They're worried about, everything else. Although, Germany took some of the pressure off, so I actually thought he was not going to do this.
So you're fading into this rally?
I'm absolutely, because I think this is, and I think the reaction today is way overdone, and I think the market's going to be soft.
You're doubling down, though. What are you buying here? What do you like?
So you got to think about that next trade. Financials have done well. They'll probably continue to do better. Groups that have lagged, specialty retail. We're buying specialty retailers that have lagged. So we're buying Abercrombie & Fitch, we're buying Express, and we're buying Aeropostale. I would be buying those three names in a basket for a recovery of broken retail names.
All right. Thank you, gentlemen. Love it when there's a difference of opinion. That's what makes a market, right?
Absolutely.
Love it. Thank you for joining us. All right. A gain of about 200 points here for the Dow Industrial Average. We're at a 5-year highs for the major averages, for all three of them here, with the Dow now at 13,535. That's first hour. Stay tuned now for another exciting second hour of the closing bell with Maria Bartiromo. I'll see you tomorrow.
On Wall Street, do you know where your money is? Hi, everybody. Welcome back to the Closing Bell. I'm Maria Bartiromo on the floor of the New York Stock Exchange. As we're following at the close this Thursday night, a very big close after a big move from the Federal Reserve. We have a market closing in the triple digits. Stocks soaring today on the latest Fed move to help stimulate the economy. The major averages surging to multi-year highs. Oil prices hitting a 4-month high today, and gold and silver rallying to 6-month highs. Does this latest Fed move mean the economy is worse off than we thought? Also ahead, Donald Trump says the Fed is doing more harm than good here. So should Ben Bernanke be fired if Mitt Romney wins the election? Donald Trump joins us live in just a few minutes with that. First, though, let's take a look at how we're settling out on Wall Street. The Dow Jones Industrial Average up 206 points today and had been up about 230 points at